very good afternoon to all of you. You have tuned into Market Fatafat on ET now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where we tell you all the counters that are buzzing in trade, either on the back of the news flow or on the back of the technicals. In a short while from now, we will connect with our team of researchers as well as our technical experts to highlight all the counters that are buzzing. But buzzing is market also winning because a very volatile trading day coming in for the benchmark indices. We started in the green note, then drifted lower and once again seem to be losing all those gains.
Absolutely, seems like that's what is happening because we opened up in the green like you mentioned, moved into the red again, then came back into the green, and as of now you can see on your screens coming in, Nifty is back in the red. So almost, very dull day coming in and volatile day coming in for the Nifty. 19,735 is what the Nifty is at. Sensex 2 trading in the red as of now and seeing a decline almost, it's flip-flopping between the red and the green, just managing to hold on to some bit of a gain of 0.01%. Mid-cap, small-cap space, what's that doing? That's also something that we're watching out for as well. Nifty small cap seems like holding on to some bit of a gain. Mid cap space, yes, down and out in trade. So yes, you can see that markets have been very, very dull today. Nifty Bank, that's the only one that is holding on to gains, and we've seen that coming in on our screens before as well. Nifty Bank holding on to gains of 0.3%. What is PSU Banks doing? Because they were the top sectorial gainer a short while ago, a couple of hours ago. They're still holding on to gains as well. Look at it. Nifty PSU Bank up 2.92% as well. And that, let's not forget that PSU Banks had been seeing a decline in the last couple of trading sessions. So today seems like a comeback is coming in for the Nifty PSU Banks. Other than that, advance decline ratios as of now seems a bit more in the favor of advances than in the favor of declines. And other than the PSU Banks and autos and bank, which is holding on to some bit of a gain, all the other sectors are trading in the red. So that's how the market setup is looking like, Shrishti. A bit of a volatility at least coming in on the Nifty 50 front in terms of flip-flopping between the red and the green.
Okay, that's how the markets are panning out. But with this, let's welcome on board our team of researchers, and we are on to the show today. We are being joined by our researchers, and on to the technical side, we are being joined by Arpit Beriwal of Motilal Oswal, and on to the research side, Vamakshi as well as Harsh are joining us. A very good afternoon to all three of you. But with this, let's kick start telling you all the counters that are buzzing, and the first counter is Berger Paints. We will be talking about that as the counter is seeing a sharp surge in today's trading session, as 23rd September is the record date for the purpose of the bonus issue, and for today the stock is actually trading ex bonus, and that's why we are seeing good gains, because for every 5 shares that if you are holding as per the record date, you are eligible to have 1 share of Berger Paints, and that's why we are seeing a great move on Berger Paints, and not just Berger Paints, even Asian Paints has been buzzing today, but specifically on Berger Paints as the stock now trades ex bonus for today. That's why no stopping since the start.
Surely keeping an eye out on Berger Paints and Asian Paints, like you were talking about that's the next stock that Arpit has actually picked up for us. Arpit, good afternoon. And Asian Paints, in terms of charts, when you're looking at it, last 6 months, 16% return. At the current price, would you still say it's a buy call coming in from you, and what is the target that you would keep for Asian Paints?
Yeah, so very good afternoon. So I was talking about Berger Paints and Asian Paints. So if we look from a technical perspective, Asian Paints, so on the weekly setup from past 7 to 8 weeks, it is consolidating in a broader range. On the downside, 3180 is a major support zone. On the upside, 3280, 3300 is a major supply zone. So weekly it is from a strong base, and looking at the overall current juncture, the risk reward is quite favorable because it is from a strong base, and we are expecting a good momentum above 3280. So it is a preemptive trade. If it closes above 3280 spot levels, then we can see a good momentum of 4 to 5% upside move towards 3400 levels. At current junction, daily scale it is holding well above its 50 DEMA. Weekly setup is strong. So at current level, one can go long at Asian Paints with keeping stop loss of 3200 for an upside move towards 3400 levels.
Okay, keep an eye out on those levels for Asian Paints over there. But let's move on, talk about the third stock that is from the banking space, and today we're going to talk about Indecent Bank. Now this one is in focus today because we have a brokerage note that is coming from UBS, and they're maintaining a buy rating on Indecent Bank and given a target price of 1,800 rupees per share. What they believe is UBS is saying that Indecent Bank is is on track for improving its earning quality, and also the focus remains on the liability mix change as well as the retail loan growth book as well, which is going to be, they're expecting to see a growth in terms of that as well. Now, the business growth, they believe, is on track for 18 to 22% over there, while margins are expected to remain stable at 4.2 to 4.3%. What they're highlighting, UBS, is that fall in specific credit cost is likely needed for the next leg of re-rating. So on the back of this, they're keeping an eye out on Indecent Bank. As of now, Indecent Bank is trading with gains of almost 2.9% after UBS is maintaining a buy on the stock, and 1,800 rupees is the target price.
Okay, but keep it with the banks. Then an Arpit from the pack, you have picked up Axis Bank. What a breakout we have seen post that 1,000 mark for Axis Bank, and till date continuing to hold above those levels. So which are the targets that you are looking out for this one?
Yeah, so talking about Axis Bank, if you see in past 1 week, we have seen a brutal correction in Bank Nifty, almost 50-100 points correction from its high. But in spite of that, Axis Bank has been holding its gain, and it has been a huge outperformer. So talking from a technical perspective, it is trading at a year all-time high. Monthly setup is very strong. Weekly setup is, it has given a fresh trendline breakout after 14 weeks. On daily scale, in spite of Bank Nifty weakness, it is holding its gains. So we're expecting good outperformance in coming weeks also. So overall, the risk reward is also quite favorable. Inherent strength is quite strong. RSI is also moving above 70 levels, and it's trading a lifetime high. So one can buy Axis Bank in range of 1010 to 1020 with keeping stop loss of 980 for an upside move towards 1100 levels.
Let's move on and talk about PNB Gilts. And Vamakshi, why have you picked up this one for us? It's surely buzzing in trade up more than like 18 to 20%, 18% as of now.
Well, yes, Vinny, if you know, if you can see on your screen, the stock was actually locked in the upper circuit of nearly 20% of late. And in fact, the stock also hit its 52-week high today, and that is because JP Morgan said that it would include India in its widely tracked emerging market debt index. Now, this has set the stage for billions of dollars of inflow into India. And in fact, this inclusion will happen post June 28th, 2024. They are expecting, India is expected to reach maximum weight of nearly 10%. The combined notional value of bonds is nearly $330 billion. And in fact, this inclusion is expected to be staggered over a 10-month period. Now, why is PNB Gilts in focus today? And that is because it is a positive development. Inflows are expected to come in the bond market. Currency is expected to appreciate, and in fact that any positive development for the bond market is in turn a positive development for the company because it is a primary dealer. So definitely this will have positive benefits for the company both in the short term as well as long term, and that is the reason why we're seeing a very sharp uptick as far as PNB Gilts is concerned.
Yes, the star performer for today is PNB Gilts, but today we also spoke with Vikas Goyal, who's the MD, where he believes that India's inclusion in the JP Morgan Emerging Bonds Markets Bond Index is good news for India's bond market and will benefit the primary dealers like PNB Gilts. Let's listen to him.
This inclusion, the JP Morgan GBI EM Diversified 110 inclusion, obviously it is good news for the country, for the bond markets, and what is good news for bond markets is obviously also good news for primary dealers like PNB Gilts. Essentially, that's divided into basically two events. So one was the event today, and the second event will be the actual inclusion, which will start, as you mentioned rightly, from June 24. So the passive tracking trackers, the funds which track the index, obviously the real money passive investors will start coming in from June 24. But that does not mean that nothing will happen between now and then. Obviously, active guys will front run this event, the actual inclusion itself. And you can already see it happening in the market. Yields are down by about 5 basis points. So, and as you know that bond prices move inversely to yields, so which is good news for us as a market maker. We need a wider and deeper market of investors so that essentially what we trade in then finally can come to rest with the investors. And the investors which we are talking about here are passive long-term investors. They are the best kind of investors. They are not looking to take a short-term view. Essentially, it's a long-term passive investment, which is good news for all dealers slash market makers.
Okay, also moving on to the next stock, and that is Electronic Smart India. Harsh, why is this one in focus today?
Well, yes. So, Vinny, we had EMI in focus. In fact, yesterday, multiple blocks coming up on Electronic Smart India. And essentially, what we've understood from this is Pawan Kumar Bajaj as well as Karan Bajaj, both of whom are promoters, have sold 2.5% each in EMI. They've reduced their shareholding. Their current shareholding stands at roughly 76% on a combined basis. Around 39 odd percent held by each of them. They've reduced their shareholding there, and what we've also come to understand is that Motilal Oswal mutual fund has gone ahead and bought around 60 lakh shares in EMI, so they've picked up a stake in EMI as well. So EMI and focus on the back of those multiple blocks as well as Motilal Oswal picking up stake.
Okay, moving on, let's shift focus to the IT space then, and HCL Tech is the counter, Arpit, that you have picked up despite the fact that we are seeing great moves in Tech M. Infosys, HCL Tech wasn't that performing that well yesterday, but what about today, and what is the outlook on this counter?
Talking about overall IT space, if we've seen from last 1 week, we have seen a decent correction in indices, but IT stocks is holding their gains. In past 6 months, there have been huge underperformer, but from past couple of weeks, we are seeing a good outperformance. So now talking about HCL Tech itself, it's been one of the large cap stocks within the IT pack. So technically, it has given a long consolidation breakout after 10 months. So as we have already discussed, there was a huge underperformance, but after that, we have seen a good up move. On weekly scale, the structure of high rise, high lows is intact. On daily scale, we have seen some cool off from high levels, from 1320 levels, we have seen cool off towards 1260, 1250. But looking at the overall chart setup, along with its RSI, that is relative strength index, it is holding its gains in spite of market weakness. So Nifty has corrected from 20,200 levels towards 19,700, but it is still holding its gains. So we're expecting 3 to 4% upside in coming sessions. So risk reward is quite favorable. One can go long at current levels between 1270 to 1275, with keeping stop loss at 1240 for an upside move towards 1320, then 1350 levels.
Okay, so that's the take on HCL Tech. But moving on, let's shift focus to Balakrishna Industries then, because ICICI Securities has come up with a note today where they have maintained their ad rating on this particular counter, but have raised the target price to 2,669 rupees from 2,577 rupees earlier. But this revision in the target price is driven by a quarter of rollover. Because of the rollover that they are doing, they have just raised the target price. But a couple of positive points is also that they have highlighted. Let me tell you those. Then they say that the export base, they are expecting that to turn favorable from the coming months, wherein off-highway tire industry exports were actually down for 8 months in a row. But now they are likely to stabilize from August month itself, because the inventory rationalization is largely done, which have been impacting Balakrishna Industry, and the demand needs to pick up for the industry exports to enter a sustainable growth trajectory. So that is something that they are tracking at this point in time. But when it comes to the India tire market, then exports have improved sequentially by 12% jump is what we have seen on a month-on-month basis. That's in line with the average monthly exports in the calendar year, though they are actually down 20% on a YY basis, but sequential improvement is what they are highlighting in off-highway tires when it comes to the Indian market. Agri segment exports have also increased 4%, which is they are seeing to be as a positive sign. So these are the factors that they have highlighted, that they are expecting for a revival in the agri segment tires, and relatively less exposure to the US should bode well for Balakrishna Industries.
Okay, so on the back of that, we're keeping an eye on Balakrishna Industries. But moving on to the next stock, and Arpit, you have picked out Tech Mahindra as well. You know, what are the charts indicating for this one now, this IT company, similar to that of HCL Tech that you spoke about before?
Yeah, so talking about IT pack, I think we have already discussed Tech M in the last week as well. So we are quite bullish overall on this space. So if we see, as we have seen huge underperformance in past 6 months, but from the past couple of weeks, we have seen a good traction. It has formed a strong base near 1220, 1250 zones. On weekly scale, the structure of high rise, high lows is intact. On daily scale, we have some cool off, but the bigger trend is positive in spite of market weakness. It is also holding well above its 20 DEMA. And slowly, steadily, we are seeing good outperformance within the IT pack, and Tech M is likely to move higher towards 1350, 1380, and then 1400 levels. So risk reward is quite favorable. the setup is quite strong on weekly scale. We are expecting good 6 to 7% upside move in coming session. So one can go long at TechM at current levels with keeping stop loss at 1260 for an upside move towards 1380 then 1400 levels.
Okay, keep an eye on those levels for Tech Mahindra, but let's move on, talk about RVNL. Once again, the stock is in focus, and no doubts or no surprises coming in that they've signed an MOU with the National Highway Authority of India, that's NHAI, for the construction of 6-lane Greenfield Varanasi Ranchi Kolkata Highway in Jharkhand. Now, the project is under the Bharat Mala Pariyojana and spans over the villages section in the region as well. Now, when you look at it, this is around 1,84,700 kilometer distance to 2,22,000 distance, which will be executed in partnership with the Chhatra Express Private Limited Company, a joint venture by RVNL. So that's when you look at the estimated cost for that also, that is something that we're watching out for as well, and that is surely coming in at around 80 crores, 85 crores. So keeping an eye out on that one. But on the back of that, today we're seeing RVNL is in focus, and on the back of that, today it's up almost 1% as we speak.
Okay, so that was about RVNL, but very interesting to see that the RVNL was also in focus on the back of all these railway-related counters.
Absolutely, the railway counters, all of them are buzzing because of that news flow as well. And you know, the orders that have been coming in were also a lot more for these companies. Even something like railways, defences, all these have been, you know, a buzz in the recent times as well, and that's why that buzz is continuing over there.
Well, yes, but moving on then, and let's shift focus to the banking space, because that space is definitely doing great today, and once its stock hitting a 52-week high for itself is Canara Bank. So Arpit, how much more upside you are looking out for this one?
Yeah, so talking about banking space, this time we have seen a huge disparity. PSU banks are outperforming from past multiple weeks. However, private banks are underperforming. So we are quite bullish overall as a PSU banking space. Weekly setup, PSU index has given a monthly year breakout, and you've seen a good outperformance. So within that, Canara Bank is a top pick. It has been a huge outperformer. So talking about technically, it has given a range breakout on monthly scale. On weekly scale, it has given a classical pole and flag breakout and forming higher highs, higher lows. So in past few days, we have seen a good up move from 360 levels to 280 levels in spite of market weakness. So we have going forward also, we are expecting good 8 to 10% upside move, although from current levels. So on Canara Bank, the setup is quite strong. We are expecting good momentum across PSU banks. So one can go long at current levels with keeping stop loss of 365 for an upside move towards 405 then 415 levels.
So keeping an eye out on those levels over there. I would just like to rectify myself when I was talking about RVNL. It's around a 1,300 crore approximately order win. So I made a mistake in terms of the numbers there, but it's a big order win, and that's why also that is there. But let's move on and talk about stock number 12 for today, and that is Glenmark Pharma and Glenmark Life. Amakshi, take us through those details that have come in on that front.
Well, yes, both of these counters are in focus today because Glenmark Pharma has announced a proposed divestment of majority stake in Glenmark Life Sciences. Let me quickly take you through some of the details of the deal. Nirma will be acquiring nearly 75% stake in Glenmark Life Sciences. Now, this is at a sale price of nearly 615 rupees per share. Now, this is definitely at discount as compared to the last closing price for the company. The company will be receiving aggregate consideration in cash worth almost 5,651 odd crores from Nirma, and Glenmark, even after this deal, will continue to own nearly 7.84% stake in Glenmark Life Sciences. Now, for Glenmark Life Sciences, the Nirma deal is happening at a valuation of 23.5 times EV to sales and 11 times EV to EBITDA. When we look at Glenmark Pharma particularly, this deal will help the company reduce its debt of nearly 4,600 odd crores, and in fact this will make its balance sheet net cash positive, so positive trigger for Glenmark out here. So all in all, on the back of Glenmark Pharma divesting its stake in Glenmark Life Sciences, we do have both of these counters in focus today. As of now, Glenmark Pharma is down nearly 3.8%, while Glenmark Life is up and away in the trading session today.
Okay, but Vinny, very interesting to know that back then when Glenmark Pharma came up with its IPO, that was at 720 rupees a piece for Glenmark Life. They are now offloading 75% at 615, and maybe that's something that the investors didn't like much about. But with this, let's move forward and let's shift focus to HDFC AMC then. And Arpit, this counter is what you have picked up. Tell us how the chart looking like for this one?
Yeah, so talking about HDFC AMC, so we have seen a good outperformance overall in mid-cap space. Although the large caps, especially HDFC Bank, has been under pressure, but mid-cap stocks are outperforming. And in last 1 week correction also, we have seen good outperformance in mid-cap. So talking about HDFC AMC, technically it is quite strong on weekly scale. On weekly scale, it is going a classical pole and flag breakout last week. On daily scale, it is consolidating between 26-20 on the downside and on the upside 27-20 zone. So that is the immediate zone. But in spite of market weakness and choppiness, it is holding its gains. And looking at the overall chart setup, we are expecting good 7 to 8% upside move in coming sessions. So HDFC AMC would like to continue to hold or buy at near dips 2550 to 2560 zone with keeping stop loss of 2600 for an upside move towards 2750 then 2800 levels.
Okay, an hour on these levels for HDFC AMC. Let's move on and talk about another IT name, and Wipro. Harsh, that's the one you picked out for us today. What is the news flow here? Why is it in focus? As of now, it's trading at the day's lowest point.
Well, yes, absolutely, Vinny. So there's a CFO change coming in through on Wipro. You are seeing Mr. Jatin Praveen Chandra Dalal, who was the CFO, resign, and we have Miss Aparna Iyer, who is now going to take over as the new CFO. Aparna Iyer has strong credentials. She's been working with the group for over 20 years. She's a chartered accountant herself and a gold medalist 2002 batch. So definitely strong with regard to where Wipro's talent is concerned. Also, you know, how brokerages are really viewing this. They are viewing this as an easy transition that were to happen. But of course, the street not looking at it as favorably. The stock is down 2.5% on the back of this news.
Okay, Wipro under pressure, but moving on, and let's shift focus to L&T Tech now, and Arpit, the third IT counter that is on your radar. Tell us how the chart's looking like for this one.
Yeah, so talking about overall mid-cap space, we have seen good outperformance within the IT mid-cap space, and within that LTDS has been a very strong outperformer. So talking about from a technical perspective, monthly scale from past 6 to 7 months, it is forming higher lows. On weekly scale, from past 12 to 13 weeks, the structure is intact, higher highs, higher lows, in spite of market choppiness. And on daily scale also, the base is shifting higher. So from past 3 to 4 days, we have seen some cool off from high levels. However, 20 DEMA, that is its daily moving average on daily scale, it is respecting well above that from past couple of months. And we are expecting, as overall IT pack, we have seen outperformance. So in coming session also, we are likely to see outperformance within the mid-cap space, and within that IT space, LTTS is a top pick. So one can go long at current levels 4650 with keeping stop loss of 100 rupees, that is 4550, for an upside move towards 4800 levels.
Okay, keeping an eye on those levels over there. That is L&T Tech for y'all. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.